We begin today with the big story about Goldman Sachs ahead of the company's Investor Day tomorrow, a rare but important event. CEO David Solomon's leadership being called into question with underperformance of Marcus and the Apple credit card under the spotlight. Joining us now to discuss what this means for the future of the company and for Solomon as its CEO is CNBC.com banking reporter Hugh Son. Hugh, welcome. Good to have you with us. As you look at Goldman's foray into consumer banking, checking, credit cards, and the like, is this just a simple case that Goldman is not suited to be in this business? It's not what they do. It's not in their DNA, was what a lot of the old guard of Goldman Sachs partners, have said from the very beginning, all the way up to Gary Cohn, who was the number two and the president of Goldman Sachs for quite a while. That's one of the revelations in this story. Still, I have to look at it, and when I look at the story of Marcus, I have to say, there were bright spots, and it was, succeeding at a certain point, and things really went south in 2021. And so, why? The death blow for Marcus was that Goldman Sachs CEO, and I will take a step back. One of the surprising things in my reporting of this story is the extent to which the decisions that CEO David Solomon made had an impact on the story of Marcus and ultimately its failure. So he had done a series of reorganizations, just shifting the walls around for this. And shifting people around for this organization. In 2021, you had a partner, a guy named Omer Ishmael, who was one of the original architects of Marcus, internally very well regarded. And ultimately, he felt like he had been looked over for this promotion that happened in late 2020. One of his peers had got it. And so he leaves for a place, a Walmart-backed fintech named One. And this sets off a series of essentially disastrous things for Marcus. You have waves of people leaving. You have a lot of lack of discipline in 2020, leading to a boom and bust scenario, and things really went south. One of the things that let Kelly jump in here in just a sec. One of the things in your reporting seems to be this, that there were a lot of people who felt that the initial credit card deal with Apple was very poorly engineered from the standpoint of Goldman Sachs. One of the delicious details in this story for sure is a meeting in which you have a credit card veteran, many decades, Barclays City, one of the folks who got hired to inject some retail banking talent at Goldman Sachs. He shows up, he finds the contours of this deal, which had been verbally agreed to, and he says, paraphrasing, what the hell happened here, guys? Who agreed to do this? The feeling was that they gave away the store to Apple, and that essentially Goldman executives were so eager to get this deal with the tech giant that they gave away the store.
And also, I forget who it was who was telling us this in the last week or so, but saying if you were going to make a consumer bank, Goldman approached it in the worst possible way because they went after credit cards and sort of high-cost online loans, which are two not traditionally great ways to build a sticky and loyal customer base. The ways to do it are to open brick-and-mortar locations, for instance, in other countries, or to do that here, to create those deep relationships, low-cost checking accounts, for example. Are they going to now try a different tack, or is this whole consumer thing history? And is David Solomon going to be history as a result? Well, that's definitely a bridge too far. One thing I will point out, David Solomon was a proponent of the digital checking account. He was enamored of the success of Chime at the time, huge valuations for these startups. But what happens is, the fintech, obviously, valuations have seen a collapse, and they've pulled back from this. On the point about David Solomon, I have to say, there is a lot of chatter. If you speak to Goldman ex-folks and current folks, there is a lot of chatter right now that he is at risk. We don't really know how real that is. What I think it's fair to say is that he has to focus on, one, creating more consensus internally among partners and other internal stakeholders to agree on the path forward, and this begins tomorrow. For Marcus, for the consumer banking, or for the company for the entire enterprise, Goldman Sachs large. And as it pertains to Marcus, to your question, they're going to be. They've obviously slimmed down the ambition there. They're basically saying we're going to be the behind-the-scenes partner. We're going to be just like with Apple. And the Apple Card, we're going to provide the balance sheet and the tech, but we're not going to be the leading brand. And so it's going to be a very much more, a smaller ambition for this going forward. And their investment day is tomorrow, so presumably we will learn at least something more about Goldman Sachs. They're going to provide deep dives into basically what's going to be the growth engine. We know now the growth engine is not consumer anymore. That was kind of the story from 3 years ago at the first investor day. Now tomorrow they're going to say what is the new growth engine, which I suspect will be asset and wealth management. Oh, I mean, they get into that now. They can't get into that now. How are they? What are they going to be, the 45th player or acquire somebody?
So, Kelly, we've had this discussion in this show. So it's too mature. Basically, they can't buy their way into it. And how are they going to grow their way into it? And
Right.
I think I suspect they'll try to convince people this is how we're going to grow our way into it, because acquiring huge asset management players, too difficult in this environment.
Be fascinating.
All right, fascinating day tomorrow. Hugh, thank you very much. And oh, by the way, Goldman Sachs CEO David Solomon will be where? Squawk Box tomorrow, 8 a.m., ahead of the company's Investor Day. I am sure that he will get lots of very spicy questions.
I was going to say set your alarms, but hopefully people are up already.